This is Justin Amazon for Friday, September 28th, 2018. It is Saturday morning because, well, I could not get the software update for Thinkorswim. Finally, just let it run all night after resetting things a couple times. Finally got it working. So sorry for the delay. Here is the video taking a look at what happened yesterday. We had a little bit of a sell-off pre-market, came down below some of the lows, some of the pivots yesterday, and coming right back up into the 2005 price. And getting into the day, we just break on up, continue on higher. This actually looks like a really nice S curve. Maybe it's just going to go. But, you know, we got a lot of this resistance right ahead here at 2013, the ones we ran into yesterday. So we go up a little bit, have some indecision, come back down. Okay, it'd be nice now if we kind of hold at 2005, but that is definitely looking like an evening star reversal, kind of rolling over at some of the lows here and here. So, I mean, it could continue on lower. So it's like, all right, this is really indecisive, really unsure which way it's going to go, especially because it's in between our two lines here. Well, now we break down, but we're holding pre-market lows. We're holding this 2000 level. And so if you're nimble, you could have been getting in bearish up here and getting out back down here. You know, this is an inside gap, but it's not really picking a direction between everything pre-market and into the day. So at this point, it actually broke down, took out the lows, starting to contend with some of the early candles from yesterday. And in the first minute or two of this candle, sold down and then got bought way up and reversed. And so this is a really nice bullish candle, trapping people who were going bearish here. And then that continues on up. So now we had a evening star reversal, and we had a morning star reversal right on 2005. Again, very indecisive. It just looks like it's, here's your big S curve, here's a small S curve, or at least a very quick S curve. It is big, another candle, third candle up, a little bit of a pause here, coming right back into 2005. The low, in fact, is exactly 2005. I always like to see these levels hit exactly like that. And here we are with another evening star reversal. So this is an inside candle now, similar to this one. This one was just larger. Here's an inside candle right after the bullish one that then starts to break down. And I'm seeing lower highs, higher lows. If this low becomes a higher low, I don't know. But it did take out pre-market. So you could consider this a lower low than this one. But just going off of what's on the day here, we have a high, we have a lower high, we have a low. Let's see what this does. Maybe we'll triangle here and then do something. And we're also starting to form a squeeze. So we get into the next candle, and here's a bullish engulfing. It does hold this low. So we got higher lows, lower highs. We got some consolidation coming on in here, and let's see, what time is this at? This is 45 minutes into the market. Here we go. Another candle that's got lower highs, higher lows, staying within that range. This is good. Okay, here we go. Starting to make a slightly higher high, relative high, but slightly higher. But it looks like we're holding the 2005 level, especially with this candle. This candle being having a lower wick, but closing still above the 2005, just like this one did. Kind of supporting these three candles going up. A flag, bullish engulfing, kind of a little bit of a stair set between these two. Still that squeeze is forming at the bullish momentum. Okay, we've got a really small candle right here, right below these levels. This triangle looks like it's, aiming a little bit further up, this low being way higher than this low by about $4, and then these being all clumped together within the same, $1 to $2. If you wanted to put an entry in here, that'd be aggressive, like at 2010, or you could wait to do it at like 2011.50, and then a stop down here at like 2004, maybe. It's still pretty wide, but on the options, you'd go, a few more strikes out to get something that could handle some fluctuation in here. And there was also opportunities to buy way down here and buy puts way up here. We can take a look at some of that. The very next candle, here's your breakout candle. So this is, so we had mostly inside candle here, definitely an inside candle here. Here's our breakout going bullish, got above these highs, but we are right at the same high here. This is 2011.12. This is 2011.09. So if you're not in, if you're waiting for a break above that, that's fine. You could actually get in as it moved above and your stop here or maybe here below that bullish candle. That if it takes that out, hopefully it just doesn't come back down to 2005 and then bounce, but it could. But this continues moving up into 2013, pushes up a little bit higher, just like it did yesterday. Very similar highs up here around 2015, 2016. And then it makes a much larger candle. It's very clear to see this triangle broke out. And if it's going to have a similar move to the widest it was, that'd be 2011 down to 1996. So that's 15. So 2011 up 15 would be 2026. Let's see if we can get up to 2026 from the high. Inside candle, breaks out a little bit more. Here's our line at 2025.57, and the high we get here is 2026.34. Close enough for what I'm aiming for from this range on a triangle, breaking out and making that kind of move. Now what's interesting is when we made a move similar size yesterday, we had a little bit of bearishness come in, a little dip, S curve, came up, dipped again, came up, dipped again, came up. It took a good portion of the day, about 4.5 hours, to go from the low to the high. Friday. Still gonna mix up the days. That was Thursday. This is Friday. You did this kind of move from 8:50 to 10:15. It's about an hour and a half to go from a low to a high, at the next line up here. And I am saying a high. This, I'll tell you, this is just about where the high of the day was. Can't remember if it's this candle or the next one. But in a very short amount of time, making that kind of move, that's looking more parabolic, whereas this is actually kind of stepping into it, waving some. This is just people just buying, feeling like they're late, they're missing out, they want to get in. And remember, I'll switch back over to the daily. Remember the rally we've had? We were all the way down on, that was Monday, right? Yeah, 924. On Monday, we hit a low of 1865. We're all the way back up at a high of 2026 in 5 days. People are missing. People have missed the move. These are those people. They're the ones buying on these candles saying, I missed it. Anybody who had bought days ago should have been looking for a place to exit on any of these lines, even in here. And that's what starts to happen. So we do go quite just a tiny bit higher, 2026.52 from this candle. And that's a bearish engulfing right on a line, 2025.57. And that's kind of our first signal that, okay, that was probably far enough, fast enough. We should pull back some. We should at least pull back into 2013. And so with that kind of candle right there, I would have been looking for an entry to get in, bearish below the candle, a stop above it, and just trust that the assessment that this is so parabolic at this point, the last ditch effort to make any money in this, that it should pull back. So our squeeze has run out. We made 1, 2, 3, 4, 5, 6, 7, 8, 9 candles since the squeeze fired. So that usually goes 8 to 10 bars. That fits. Here we go. So maybe I'm in if I got filled on this, or we definitely have a clear evening star reversal if you merge these candles together, or just look at these two and then this one. We've got a little bit of support here, a resistance down here, 2016, and then 2013 line. So here we come down to some of those. This is really nice where we kind of go sideways with these two candles. Um, it'd be great if this has a little bit of bullishness come in and then get in below that if you're not in, or if the bullishness comes in as a retest to something up here to get in bearish on that bullish candle, because this is, you know, 5 candle, you know, first we had the bullish and bearish engulfing, then we had then 5 bearish candles, some consolidation here right on your resistance, your old resistance, new support, and then see if we get a little bit of bullishness. There's some bullishness. Now it's bullish engulfing. This kind of makes us look like a double top, like a slanted double top with a neckline kind of on an angle here. And that's the bullishness we need to then roll over. So here's an inside candle, inside, there we go. Wick down almost to 2013, but if you had gotten up here, you could have been taking some profits somewhere in this range close to 2013. And it goes sideways, stair steps through here, and then we break down. And so there are some other opportunities to get in bearish, you know, to retest here on a breakdown through here, a breakdown here, you know, if you're still getting into this. But now we're below 2013. We're retesting essentially these highs. So it's okay if we bounce up again to 2013 and then roll down. That's what happens. And then we roll down into 2005. Of course, at 2005, we'll probably bounce again like we did earlier in the day. And then we actually double bottom here, come back up at 2013. These levels are working so well. Indecision on 2013. Evening star reversal again. And really like this rest after battle, and then a bearish move. And we're getting into, you know, the lows we talked about earlier. We took out this low now. We took out this double bottom. We've got another squeeze that formed here. Now this has already moved nicely after the squeeze, or with the squeeze going. So I don't expect that to continue, you know, with, you know, a much larger bearish move. It is right about 1 o'clock in the day. There's a double top here, so it could retest and then roll over. But this actually, it puts in another double morning star reversal right here, comes back up, does retest the neckline with this candle, and then rolls down again. So double top, retest, roll over, down into right about 2000. These round numbers, you know, you could have just traded this 2025 down to 2000. That would have worked right at, like, the low was 2000 on that candle. Just like you could have bought. You could have bought at 2000 and exited 2025. Just nice round numbers. I've got extra lines in here because we've been pivoting on those. They've been set up from whatever it was weeks ago that are still working. You know, like the high on this candle, 2025.57 is the high that we ran into today, but we went a little bit past 2026.52. But that's the level that we used, and it worked today. And then these candles, this I think was an open or a low. So 2004.75, we just used 2005. You know, that's a price we're using today. The low on this candle was right at 2013. We were using 2013 yesterday and today. So these levels, you know, they're playing out again. It's great to have this kind of a bearish candle right at the resistances here, right below this. But we're literally a stone's throw away from the all-time high, 2050, 50 cents. So let's finish up the day, and then we can look at some other things here. But just like we had a double bottom here, this kind of looks like a double bottom, just slanted. We've got about an hour left in the day to see what can happen, and we're just chopping right on 2005, and that's it. That's the day. So if you were trying to do something right here at the end of the day, you missed this move and you missed this move, and it's better to just kind of take a step back. The last thing I probably would have been doing is this rollover here, because it's such a nice level that we got into yesterday, and then to see it roll over, retest this morning or this evening star reversal, and a rollover like that, you know, getting into it bearish, possibly this one, but I mean, this, you got to be really careful with which option and what price you're going in at, because it's just trying to suck all the premium out in the last hour and a half, 2 hours of the day. Anything out of the money is really, you know, you got to watch how these are trading. any time when it's expiration Friday, because all the premium is trying to be sucked out. So I wanted to look at trading it out of the money option as this rollover. But let's look at the calls first. So if you look at the 2025 call, you could have been buying for $1 and a stop at zero, essentially an absolute zero play, buying any of these candles and just having a stop, or having no stop, having a target set up, a few dollars away. And on that candle, probably exit some or all, and then this push higher up right into the 2025 price. You could have been just exiting right at that level, and probably would have bought at 1 and exit at maybe 550 or 6, something like that. If you would exit at 6, that would have been a 5R, obviously, and that would have been just waiting for something like this to happen. Maybe that price, $6, is too far away with how yesterday worked out, where it just kind of grinded higher and this actually shot higher. So maybe you would have just been buying at 1 and a target at 3, just to have a little move. That would have been 2R. It would have been easy 2R the way that it played out, but not easy for the setup, because it's like, okay, what's it actually going to do when it's down here at $1? We're $25 away. You would have had to go into it thinking, I'm going to lose this, but I'm okay with that. And if you get your target, or if you get, if you're able to exit a little bit, your first target a little more later, and then just be watching it, that's great. Some people don't have the luxury of being able to do that. So now if we look at the rollover here with the $2,000 put, we came into that high around, I think it was 10.15, and we're right at $1 on the 2,000 strike put. And that went from $1 to $3. Not once, not twice, 3 times. Now this one, the high was $3, so I'm not sure if it would have been filled. But after it did it 1 time, 2 times, you did that same trade. That's 4R. Maybe you snagged another R and a half on this one, and that's still 5R. The same, buy at 1, sell at 3, buy at 1, sell at 3, buy at 1, sell at 3, or maybe you got stopped out and that went for break even, or you saw this candle come in and you got out at 150, so that's half an R. So maybe you got 4.5R on the same setup on expiration, just because you know how this moves. So this did not happen on the 5-minute candles. This is a distribution or accumulation pattern. If you saw it going sideways like that on a daily or on a 5-minute or on any candle related to just the stock. But when you look at the option, all these moves, let me see if I can restore this. Let's just zoom in on the day. Okay, so we had this happen here. Let's see. Oh, we're looking bearish. Sorry. Think of it inverted. So right here, where I said, if you didn't get in here or didn't get in here, there were still opportunities. You could have been getting in here. You could have still bought this option. Like this was flat all the way through this move. This is not the 2,000 put is not the put you would have been playing up here looking for a huge move down. It was flatlined. You probably lost money on that. But if you're patient, after this kind of move, it's so bearish, but it still has the potential to do some more moves bearish, and we're getting closer to that 2,000 strike. You're still out of the money, so it's going to be sucking the value out. So you could have bought right in here off of that candle. You could have bought, what was that right here? No, it's not. Cursor's supposed to move. There we go. Okay, that candle, you could have been buying for $1. This candle could have been buying this put for $1 and stop at 0, and then that would have moved from this line to this line and would have gone from $1 to $3. You could exit, and then again, so not here, but waiting for it to come back up to this indecision. Okay, hey, look, we'll buy for $1 again. Actually, you could probably get it for cheaper. Bought for maybe 75. Not even this one. You could have bought this one, and then you would have been looking like you're losing money, or it's going to not work and panic sold. But it's just the way that the out of the money option works on expiration Friday. So study this, because you have this downtrend here, you have a steeper downtrend here, and then you reset to this downtrend here, and all the while the premium is getting sucked out. So you're going from 1 to 3, 1 to 3, 1 to 3 multiple times because this is out of the money. these options move a little bit different, each of them. So the 2005 strike, moved like this. So we actually were a little bit above $1. So you couldn't do exactly, a dollar. I mean, you could have done $1.50 by 50, something like that. But that went from 1 to 5, and then, or 150 to 5, then 150, maybe 150, maybe 2. Let's say 2 to 5, 2 to 5, almost 203 up to 5. Multiple times. So it's just getting the this getting your mind trained to, this is gonna not cooperate. The options are not going to cooperate like this. It's going to flatline. If you want to trade this, like up here, look at this, you got to be much closer on your strikes. So if you look at the 2025, this is the one that is actually out of the money till here. The low on that was 2025. And so, had you watched this roll down and not even gotten in up here, and then some of this stair step in here looking for a low, the low here is 810. I mean, that's not a really good risk to reward. You can't do that with $100. So go to the 2021, and there we go. So now, okay, here's your low here. These sideways candles here, maybe you got in, a stop limit of 450 and a stop at 350, and that, maybe that didn't work. Well, it could have worked if it worked because you triggered in here, and then your 336 would have been hit. Or here's the lows, maybe got in 5 by 4 after it moved up a little bit. 5 by 4, that would have worked to go up to 15. That would have been 10R on an entry here, and this candle 5 by 4 would have been very aggressive, but that moved. You probably would have had something in taken off at 13 because that's the lows. It just happened to go up to 15. So buying the 2020 put right here as it touches that price, that strike, and just holding it to the 2005 price, that would have been a move of easily 8R. But you got to just know how these move and which strikes to get. And so we're going to continue to look at this and study this and see what we can do to make some really small risk trades on Fridays, getting into this kind of stuff. And we just had a day that moved really nicely through our levels, and you map those levels onto the options, and you can really see what's possible. So I hope you enjoyed this video. Again, sorry that it's the next day. Fortunately, it is a Saturday instead of another trading day. And this is video 150, and I hope you enjoyed it. This is Justin AMZN. Thanks.